Welcome to The Explainer. Today, we are cutting straight through the noise, the hype, and the confusion surrounding cryptocurrency. We're taking an impartial, data driven look at the hidden risks of the crypto revolution, exploring exactly how it's altering our economy, our environment, and global security. Let's dive in. Picture this for a second. You wake up, grab your phone, check your portfolio, and bam! Your life savings, they've just lost 80% of their value overnight. Poof, gone while you were literally asleep. Sounds like a total nightmare, right? But for millions of folks dabbling in digital assets, this isn't just some crazy hypothetical thought experiment. It is a very stark, very painful reality. And here's the real kicker. When that 80% vanishes, what are you left with? Absolutely nothing. No warning, no friendly customer support line to call, and definitely no refund. In the traditional banking world, we're used to safety nets, regulations, and protections built up over decades. But out here in this digital frontier, millions of investors are flying completely solo, facing these devastating losses without any institutional backstop when the floor drops out. So here's how we're going to break it all down today. 1. The extreme volatility trap. 2. Scams and stolen funds. 3. The environmental cost. 4. Crime and regulation. And finally, Section 5. The verdict on crypto. All right, let's jump right into Section 1. The extreme volatility trap. Okay, so one of the biggest, most fundamental hurdles for crypto as a reliable store of value is the wild price swings. We're talking about assets that can just casually jump or crash by 20, 30, or even more percent in a single day. That kind of daily roller coaster, it totally transforms your standard investment strategy into this high stakes gamble that can literally wipe out leveraged positions in a matter of minutes. And we really need to look at why people keep getting on that roller coaster in the first place. A lot of times, market moves in this space aren't based on, actual underlying economic fundamentals. They're aggressively fueled by FOMO, the fear of missing out. You got social media influencers, massive celebrity endorsements, and viral campaigns creating these sudden giant surges of hype. And when that hype inevitably fades, the crash is brutal, with the newcomers who bought at the absolute peak with some really deep financial wounds. Which brings us to Section 2, scams and stolen funds. Look, where there's extreme hype and massive amounts of capital, you are practically guaranteed to find bad actors leveraging deceptive tactics. Every single year, billions of dollars are wiped out globally through operations like rug pulls. That's where developers suddenly just abandon a hyped up project and drain all the liquidity, and pump and dump schemes, which are specifically designed to trap retail investors right at the peak. Throw in some highly sophisticated phishing attacks, and you've got an ecosystem that requires absolute constant vigilance. But the core vulnerability here, it really comes down to finality. In crypto, transactions are almost always irreversible. Because of the underlying blockchain architecture, once your funds are transferred to a scammer, they are gone. Recovering stolen assets is practically impossible. Now, does that mean every project is a scam? No, of course not. But it absolutely removes the safety nets like chargebacks and fraud departments that we completely take for granted in traditional finance. Moving on to the macro level, here's Section 3, the environmental cost. Securing these massive decentralized networks comes with some pretty huge real-world trade-offs. On one side of the spectrum, you have proof-of-work consensus. This is what major networks like Bitcoin use, and it demands enormous computational power. In regions relying heavily on fossil fuels, this intense mining process drives carbon emissions straight through the roof. But on the flip side, you've got newer networks using proof of stake. These offer a highly energy efficient alternative, securing billions in value while using just a tiny fraction of the electricity. So the environmental footprint, it completely depends on a specific engine mining under the hood. All right, Section 4, crime and regulation. Because cryptocurrency enables incredibly fast, borderless, and pseudonymous transactions, it's unfortunately become a highly effective tool for illicit activities. That actors actively exploit the technology to pull off devastating ransomware attacks, widespread online fraud, and some incredibly complex international money laundering operations. It's a real paradox, right? The exact features that made it such a powerful, frictionless financial tool for regular users are the exact same features that make it perfect for obscuring dark money from global authorities. And this dual nature has forced governments all over the world into a really tricky balancing act. You've got some nations leaning in, actively structuring their laws to attract crypto businesses and deeply integrate blockchain into their economies. Meanwhile, other countries are throwing up massive roadblocks, imposing strict restrictions or even outright bans to protect their citizens and their sovereign currency. This heavily fragmented, totally patchwork global regulation creates a ton of uncertainty and compliance risk for both the businesses operating in the space and the investors backing them. which leads nicely into Section 5, the verdict on crypto. So, the reality of this technology, it is definitely not a simple yes or no. Based on our source material, let's quickly lock in the 5 undeniable risks we've uncovered today. High volatility that can wipe out wealth in an instant, pervasive, irreversible scams, severe environmental footprints for those proof of work networks, deep, ongoing regulatory uncertainty, and of course, the persistent threat of criminal exploitation. These are the documented realities shaping the current digital landscape. But, an objective explainer means we have to evaluate the other side of the coin too. Cryptocurrency absolutely enables vastly faster cross border settlements. It's driving some profound financial innovation in decentralized finance, and it is paving the way for advanced blockchain applications that really could revolutionize entire industries. Just like any incredibly powerful tool, its ultimate impact depends entirely on how we actually wield it. So, what's the practical takeaway here? If you are going to navigate this volatile space, the playbook is pretty clear. Step 1, do your own thorough research. Seriously, don't just blindly follow influencers or trending hashtags. Step 2, never invest more than you can safely afford to lose. Keep that devastating 80% drop we talked about firmly in your mind. And step 3, avoid making any financial decisions fueled solely by FOMO or hype. You gotta keep a level head out there. Which brings us to the end of our explainer. We've weighed the extreme highs of innovation against the devastating lows of financial loss and fraud. Now, I'll pass the question over to you. Is crypto shaping a better, more innovative future, or is it just creating bigger, unmanageable risks? Let me know where you stand in the comments below. Make sure to subscribe so we can keep analyzing and learning together. Until next time, stay curious and stay focused.